All right. Good morning, everyone. Today is the 3rd of April. So it's the beginning of the new month, which I hope you guys, and I wish a positive month for everyone. And I hope you guys had a positive first quarter of the year, right? It's already the first 3 months and we are starting the second quarter of the year. So it's time to do some analysis, to review your own trading performance and to maybe make some changes and to see what's working and what's not working, and adapt that, implement that in your plan for the second quarter of the year. Yes. So today, as always, we do the weekly market analysis. So forecasting maybe what we can expect for the week ahead and paying attention to what happened in the previous week. My name is Pedro and I'm the market analyst at Alphachain. So let's get started, right? So first of all, the market opened with a big gap, and that was because of basically the oil, right? So the OPEC 9 members decided to surprise the market and jointly forced the cut production of close to 1.6 million barrels per day, and we saw the big jump that occurred. Actually, you can just take a quick look at the oil, and you can see that price was around 70s, and all of a sudden 75, and it opened at 80, right, above 80, and we are back literally at this range at the highs in here that we were trading for the last 3 months or so. So again, question mark now, are we going to manage to break this level or not? Basically, price gapped above that level. It was actually a level that we were looking at, that this high never reacted from there. So let's see, maybe we can close the gap and then maybe continue to the upside. But that was already a big surprise and can have real impact in the market, in the economy overall around the world, starting, for example, with increase of cost in many sectors, which is going to bring, or it can bring, inflation back to the upside, which, as you know, since last year, it has been the main battle from central bankers, is to reduce inflation all over the world. So that's basically the first big news that occurred this weekend, overnight, as a big surprise. No one was expecting that. If you take a look at last week, as we talked, there was not that many macro data coming out last week, except maybe for the final GDP last Thursday. It came out as 2.6%. So for the in the US. Another one, which was, for example, the unemployment claims. As I mentioned, now it's actually a red news event, so high impact, not just normal, but actually high impact. Main reason is because everyone now is paying attention to the unemployment and the job markets, to see when are we going to start having that increase that most likely is going to be expected to all the conditions and to the hikes in interest rate that the Fed has been doing, right? So again, the numbers has been okay, a little bit higher than expected, but it's still below the 200K mark, even if it is maybe close to 220, which has been a little bit maybe the average. Actually, this year it has been mostly below 200, so it's still quite steady in that regard. But the main point of the week, last week, it was last Friday, right, when you had the core PCE, which is actually one of the main data points regarding the inflation that the Fed looks at, right? It came out 0.3%. It was minus 0.1% than expected. And even the previous month, it was revised a little bit to the downside, which places now the core PCE at 4.6% year over year. And the Fed is even expecting, when we had the last meeting 10 days ago, Fed is predicting for the core PCE to be at around 3.6% by the end of the year of 2023, right? So it's going down after a little bit of a spike that we had in the previous month. It scared a little bit the market, so we are back to the normality at around 0.2%. So that was good news regarding the inflation in the US, and also we had inflation coming out in the Eurozone. So again, it was at 8.5, expected 7.1. It was actually even lower than that at 6.9%, which is good news also for the Eurozone. So on the same day, we had good news in the Euro zone and in the US regarding the inflation, which is perfect, right? Christine Lagarde in the Eurozone, in the ECB, is still expecting to keep hiking, to keep increasing the interest rate in the Eurozone. In the Fed, it can be, that's the discussion, right? We can actually pay attention to that. So let's see where the market is at this point, what market is pricing in for the next Fed meeting on the 3rd of May, basically 1 month from now. At this point, the market is expecting 6%. The odds are to another hike, and maybe the last one of another 25 basis points to reach the interest rate to 5.25, and 40% is expecting maybe no hikes at all, to stay where we are. So let's see how this prediction is going to evolve during the next month until the next meeting on the 3rd of May. Again, the main difference, it has been always what the market is pricing in and where the rate is going to be by the end of the year, comparing it with the Fed. Are you going to have any cuts or not? Or are you going to just stay steady at that 5% or 5.25 until the end of the year? And that has been the main difference between what the market has been pricing in and what the Fed has been saying. So let's see eventually how that's going to happen. Last week, also some other big news that occurred. It was the manufacturing PMI and non-manufacturing PMI in China, right? So there was a really big, a strong number for the non-manufacturing PMI, 58, which was the higher number all the way since 2012, which shows strength and continuation of growth in China. And actually, this news apparently it was an enough catalyst to move the market. If you pay attention to where the euro dollar, pound dollar, USD CAD in that moment, even dollar index, for example, all of them, they created the higher highs or the lower lows. It depends on which one you're looking for, exactly at 2:30 a.m. On that day. Exactly this moving here, 2:30, exactly when the news comes out in China. Apparently, it was enough to move the market. It was as well the high on euro dollar, pound dollar, and maybe the other pairs as well, which was interesting, right? To see how the market is aligned and it moves kind of in the same way. This week, what are you going to have, right? So it's going to be a shorter week for some, because we're going to have Good Friday, so it's going to be bank holiday, most countries next Friday, but at the same day, we actually have non-farm payrolls in the US, right? So it's going to be a strange day in the market, because don't really expect any volatility or moves in the morning in the London session, but then you have this big catalyst, and then you just have the US market open. So again, let's see, sometimes when you have less liquidity, less participants in the market, and all of a sudden there's a big news like this, it can actually originate big moves, bigger than expected, because there are less participants. So any big order that goes into it can move much more than when there are more participants to kind of fight for the orders. So it's going to be interesting to see. Looking at the prediction at this point, we have the market predicting the unemployment rate to stay at the same rate, 3.6%, and for the number to be at around 235,000 new jobs being created. As we've seen, and compared with the last month that we looked at it, the prediction since April, right? since April of 2022, so since 1 year ago, the prediction or the real value has been always higher than the prediction, right? You can see this kind of gold line in there. It has been always underneath the full bull bar that you can see, right? Which is actually the real data. The other one is expected. So let's see if we're going to continue to have higher numbers than expected, or are we finally, or the market's going to finally see different data lower than expected, or a little bit more in the range of what the market is expecting. All right, and maybe when you do see that, there you go. Maybe that can be the adjustment that most likely the market is already waiting for it, and the Fed is literally waiting for it. They also announced 10 days ago when they did their prediction that most likely the unemployment rate would go close to 4.3% or 4.4%. So there's they're expecting it to go higher from this 3.6% in here. When you have non-farm payroll on Friday, we usually have another 2 data points regarding the labor market coming out during the week. At this point, you're going to have on Tuesday first job openings. So this can be the first clue of what to expect then for the non-farm payrolls. And then we have the ADP non-farm employment change as well, which is going to come out now next Wednesday, right? So let's see. Again, this can be literally can start to give some clues of what to expect from the non-farm payroll data that's coming out next Friday. Today, we had 4 days of manufacturing PMI data coming out. Again, it's still showing a little bit of contraction around the Eurozone and in the UK, and most likely in the US, the data is going to be below 50%. Below 50 again, when it shows below 50, it's unemployment, it shows contraction. Opposite to the services, right? The last time that we had the services PMI being announced, it was quite strong, to above 50, and it was like, if I'm not mistaken, it kept growing month after month, especially in the US, which is a good news in that regard. But manufacturing still needs some improvement. Then we have interest rate decision in Australia and New Zealand. Australia Tuesday overnight, and then New Zealand on Wednesday overnight as well. It's going to be a big question mark in here. Is the Reserve Bank of Australia ready to stop, or are we going to have another 25 basis point hike, right? The market is pricing in at this point another 25 basis points to go from 3.6 to 3.85. But there is some concerns going on regarding these hikes and what's going on in Australia, right? It's a little bit under pressure. It has announced already a few times that the real effects of all these hikes are still to be seen, because there's a delay until the economy actually reflects all this data. They've been increasing, if I'm not mistaken, for 10 hikes in a row. And they have a few situations. For example, around 1 million mortgages seem to be at risk. And there are maybe another, if not mistaken, around 800 people that has been changing their type of loans from fixed rate to variables, which can be even more riskier as well. So there can be some problems in the near future in Australia, and that's why there's a little bit of concern if it's going to continue to hike, to give another 25 basis points hike, or it's going to stop for now, and we'll see. On the other hand, the inflation, if not mistaken, at this point is still at 6.8%. It's a little bit high still. I think, if I'm not mistaken, the last month was a bit higher than the previous month, or it was the month before. That was a little bit of a spike in the inflation. So again, it's not really a battle that has been won in Australia. Let's see what's going to happen. They are predicting the inflation to be at around 4.75% by the end of 2023. And New Zealand, much higher on the rate. It's basically going to match the Fed in terms of where the rate is going to be. Another 25 basis points expected to be at 5%, just to equal the Fed at this point. So we'll see again what's going to happen in there, and what kind of consequence and short-term effects is going to have mid-term effects going to have in Australia of these decisions. That's basically it in terms of the news. Also announced that they're maybe starting to have some job cuts in the banking industry. At this point, it is basically just the tech industry that has been laying off people. Now, maybe the banking system can follow through. Starting with OBS, that maybe announced or kind of some reports announcing that it may cut 30% of their own staff, especially after acquiring Credit Suisse. But there may be some reports also that maybe Dutch Bank, Citigroup, JP Morgan could also follow through as well and maybe start laying off some people. And that will be kind of the second sector to start doing that after the tech, as you know, Facebook, Meta, Google, Tesla, I'm not sure, Twitter, and so on. They've been laying off people in these last few months. Yeah, and that's basically it in terms of the news, or maybe what to expect for the week ahead. So now, if we pay attention to the market, we are seeing the dollar it turned a little bit as we kind of predicted 1 week ago. Meanwhile, it's still just within the same range, right? So there's still no proper break that shows the intention or kind of the confirmation that price is ready to start doing this. A few levels, at least personally, that I would like to see being broken before having that information. That the level that I'm talking about is literally kind of around this level in here. I would like to see this being broken to start giving that information and expecting price to go higher. Until we kind of have that level, maybe this can be just a retrace on the dollar, and you may have dollar continue to go down. And as you mentioned as well, this was one of the levels to expect some reaction that is happening. There's maybe a little bit of the extreme in here. We created now double bottom, which can be nice. So price can actually kind of fake out now this double bottom in there, and the last zone could be a little bit underneath. So there is still maybe another one and maybe another one that price could still react from if it breaks out or fake out this double bottom. And again, if you do break above this level, that's going to be a good, maybe cool that maybe price can go and move higher. So this is for the euro. This is for the dollar. So a little bit of a range at this point. We also have looking at the indices, for example, we are seeing such a momentum going on in the indices, right? So we have Nasdaq. Let's start with S&P. So we have S&P moving to the upside after retesting this level in here 2 weeks ago, basically in the beginning of March. We are seeing this bullishness and price breaking out the structure, and now retesting this level where it dropped in the beginning of February, right? So let's see if we do break this level of resistance that we have seen, or we're going to find some barriers in here and start moving to the downside. So basically between this level and in here can be a range to look at, or even this level in here. So that can be a little bit of a range that we can see on the S&P, or by any chance we just continue to go higher and you're going to maybe reach one of the targets that you have been looking for all this time on this bullish, since price kind of turned to the upside. One of the targets has been these highs from August that we had in here, and that could be kind of one of the final targets for this move to the upside on the S&P. And after that, maybe price can maybe resume to move to the downside, where opposite to the S&P, we may even have, actually opposite to Nasdaq, we may even go a little bit higher in here. I wouldn't be surprised by any chance if we actually even fake out these highs created in August, while Nasdaq doesn't really need to do that because it's already reacted from the zone on the left side, as I'll show in a bit. So S&P still has a little bit of this price. Nasdaq has already reacted from there, so Nasdaq can literally just maybe react from the highs. We'll see what's going to happen, but we indeed are seeing this bullishness on the indices during this last week. Maybe market satisfied with the way the Fed dealt with the crisis that occurred in the banking sector, and that kind of led to this rally. A little bit of positive news, maybe with inflation as well being a little bit lower, or is this just a monetary momentum before maybe price kind of literally flips to the downside? Because there are worries news regarding that. For example, we had historically basically the worst month in terms of money moving away from the banks in terms of deposits, right? Everyone with the crisis that with the situations, SVB and some other situations, basically everyone or many people took their money out of those banks, moving their money to other financial institutions where they could call it money makers, where they can get some better yield and safer as well, where they can deposit their own money instead of having in these smaller banks and so on, right? So there you go. Historically, it's one of the worst months ever in terms of money moving around in their deposits. So yes, we have in here S&P, Nasdaq kind of follow through as well, breaking this high already, continues to move to the upside. And again, question marks going to be how price is going to behave around this level in August. This high is created in August in here. As I mentioned, kind of S&P already reacted from a good level in here. Nasdaq reacted from a good level. S&P could go a little bit higher. Let's see how the market is going to react from here. Are we going to continue to go higher and break through, or by any chance we're going to start having something like this occurring in here? That's something that you need to pay attention to. So we'll see. Earnings, if not mistaken, it may start, if not next week, maybe in 2 weeks from now, which is going to be another big catalyst to pay attention to. And that, there you go, for sure it's going to affect the indices. Looking at the Dow, we can see that has been moving to the upside as well, right? If it reached that level, that target that we were looking for, and from these lows, and after that it reversed. So let's see if it's going to break this level, or if it's going to get closer a little bit towards here. That's maybe a good zone to look for. So let's see. Again, the prediction that we have made was for the price to go all the way and retest this level. So to make all this move down, that has happened. So now we need to wait and see to what next on the Dow. There's maybe the chance that we can go a little bit higher, retest this previous level of resistance close to 34 K mark in here. And even DAX has been on the rally, moving to the upside as well. Which I have a little bit of a different data in here. All right, let me just look at the other one, because the data is different, a little bit different. As you can see in here, we already broke these highs. On the other one, it's still kind of still testing those highs in there. So there you go. We finally managed to break this structure. It was a kind of a natural move, right? All the way through to test previous level support resistance and continuation to the upside. Sometimes by doing this analysis on the higher time frame, it can help to actually fine tune and predict good levels. And let's see, right? I was looking to see how price would react above this high. So that's something that I'll be looking for, or then price may just continue to go even higher. But yes, I was looking to see how price would react above here. So we are around that level now. Yeah, just keep following. There's no reason to look for shorts until kind of have a proper break of a low to start showing that indication. And that's basically it for the indices that you usually look at. In terms of the Euro index, we have price retesting those highs, continue to move to the downside. We are in this range, right? We have been in this range and we continue to be within this range. So is this level still going to continue to hold price in here, and price going to move down, or by any chance now we're going to have a little bit of a break to the upside. Something that I would like to mention is even if you do break above this high, I'm still not going to be turning 100% bullish in here because I still like a little bit is zone above it. So I could still see break of this high and then price continue to move down. If you do break above this high, then I would like to see price just filling everything in here and getting close to this 104 mark in there. So yes, the barrier is not going to be just a high, but actually all this structure a little bit above it that you could still respect it and maybe still find that opportunity to look for sales on the euro. And then the yen, right? The yen, which is basically this week, if not mistaken, is going to be the last week of the current governor of Japan, Mr. Kuroda, and then the other one is going to take charge and replace him as a new as a new governor of Bank of Japan. What you have seen in here is a reversal in there since we had last week in here, or yeah, it was last week. Let's see if the momentum of the yen is going to continue to move to the downside. This is kind of a little bit of a good reaction. I wouldn't be surprised if you continue to move forward, at least until here, if not even a little bit lower, closer, maybe closer to this level. So let's see how price is going to react when it gets to this level. We are within this range. So yeah, I would like to see price getting closer before kind of making another move up. That's kind of what I would like to see happening in here. So if you go through our traditional individual currency pairs that we look at, we have euro. Euro has been making or created that double top last week, right? It respected. We had this high, and prices created that double top, even another high created in there. We had a big move to downside. We opened to the downside even today as well, but we had this turn already occurring a little bit overnight. So let's see if price is going to react to this level in here again. Are we going to hold it again, or are we going to move a little bit to the upside, maybe fake out this double top that we created in here? It's something to pay attention to, and it's moving quite similar to the dollar index as it should happen, right? Because of all the correlation that we see. So most likely, if the euro takes these highs, most likely dollar index is going to take the respective lows that it created around the same time. And let's see. Yes, there is maybe the chance for the euro to continue to go a little bit higher and kind of retest these highs in there. So yeah, a little bit of indecision. Let's see what's going to happen on the euro during this week. Then we have pounds, which has been also moving to the upside. It retested all these highs last Friday. It moved all the way through to the downside, and now basically retesting this previous level of support resistance and reversing this morning. So are you going to manage to hold? Is this going to hold price down, or by any chance we are going to eventually start breaking and going higher, and eventually maybe taking all these highs? So that's something to keep an eye on as well on the pound. Bigger picture, there's maybe still a zone above these highs that price never really got there. All the way back in the end of January. There was a zone above that price never reacted from there. So if you do take that, maybe price could go there. So let's see. Let's see if price is going to break this level. We did break a little bit these lows, but we reacted straight away from kind of a good level. So let's see what kind of movement we are going to have, and if you're going to continue to have some momentum in here and weaker dollar for the week ahead. Similar on the Aussie, right? Similar, but the Aussie, if you compare, for example, with the euro and the pound and the dollar, with the euro and the pound, it's moving much weaker comparing with the other ones, right? The other ones are already kind of getting really close or retesting those highs from February, while Aussie is literally still trading within this level, right? So are you going to manage to break above this structure? Kind of yes or no? That's kind of the question mark. Again, don't forget that tomorrow overnight we're going to have the interest rate decision in Australia. That can be a good catalyst to finally kind of have price moving into one of the other direction, either to the upside or to the downside in here. So yes, that's again, let's see, because for the last month or so, Aussie has been within this range, not really going anywhere. Euro Aussie actually has been a little bit offering better opportunities. We are getting really close to these highs, and we may be close to a turn on the Euro Aussie. And if you go maybe down on Euro Aussie, maybe we can expect Aussie dollar to go up. So yes, we are getting close in here. We just took out this a lot of a range, a big range in here. So we can even start to do that now, or even create a little bit of a new high, and then starting to move to the downside. Maybe we're testing all this range in here. So it's another thing to keep an eye on regarding the Aussie. And then the yen pairs, right? As we can see, it has the yen index has been going down, so expecting the dollar yen to move higher. We did took kind of these highs into this low. We faked out that level. Next level to look for. Personally, I was looking for price to go above these highs, at least, maybe getting closer to that level, which is maybe where price is slowly heading towards to. We have kind of this compression on the way up. So let's see. We open also with a gap, price closed gap, and now we are getting trading basically at around this level. I would like to see the yen continue to move higher before anything else. So that's kind of what I would like to see. Nevertheless, this one is actually an engulf down, showing indication it wants to go down, kind of maybe closer to here. But before that, price may wants to go actually higher before it goes and fills that space that it opened. So that's for the dollar yen. We have euro yen as well. There's been super volatile with everything that's going on in the euro and then in the yen pairs. So there's been much more volatile than the dollar yen by itself. We broke these highs, kind of respected now this previous level of support resistance plus this demand zone. So maybe we could continue to go higher, maybe getting closer to that high on the left side. So we'll see if this is just a continuation now to the upside, following through with all those from those lows in there. And then we have the CAD, which has been moving to the downside. And CAD, of course, is one of the currency pairs more affected or super correlated with oil, and we saw as well kind of the gap happening during over the weekend. We are in this bearish momentum on CAD, right? So we went all the way through test kind of these highs. All these looks compressed. That zone has been filled. Price reversed a little bit, but then the compression kind of looks like it can continue to go farther down. Maybe price could retest all the way until here. It looks like the momentum to the downside on CAD, it's here to continue. So yeah, let's see what you can expect in here on the CAD. Maybe retracement, then continuation to the downside. We'll see. And then our franc Swiss. Our franc Swiss has been in this range, not really moving that much, a little bit similar to the dollar index. I would have liked to see this level to be broken, to start opening space to the upside. That never happened, or it hasn't happened yet. So yeah, interesting to see if these lows are going to be able to manage to hold price to downside or not. That's something to look for. Is this going to happen or not, or are going to create new lows, and maybe price then can look for something else before moving higher. So yes, we are within this level, in this big indecision in here. Yeah, personally, I wouldn't mind to see price going higher. I still kind of like these lows in here, so that's something that I could still attempt to look for. Yeah, we'll see. Kind of broke that structure in there. kind of reacting from here, which doesn't really see much. So I wouldn't mind to see price going a little bit higher. But we may create new lows before we do that. So keep an eye maybe of this level. If this is broken to the upside, maybe we can have that turn happening in there. And then gold. Basically, this last week it has been in this range after such a momentum that we had since the beginning of March. So it was a full super bullish asset in the month of March. And we are within this range. We haven't managed to break any lows, so the lows are still being respected, but we are slowing down. We are struggling to create new highs. I wouldn't be surprised if we do create that extra high, even before maybe some kind of turn. But yes, we are starting to slow down a little bit, finding some resistance at around this 2000 mark. We have then, of course, that double top, historical double top in here, close to 2075 mark, 2070s. We'll see if by any chance we are going to get closer to that level or not. But gold now is within this indecision zone. So let's see which side is it going to break first. Is it going to break kind of below this level, or is it going to eventually go all the way up in here and break above this highs? And then just to finalize, we always take a look at crypto and Bitcoin and Ethereum in particular. So again, we are within this range. Bitcoin has arrived and has reached this important level of structure, close to the 28, 29, and even 30 mark. It has been a really strong level of support all the way back in the beginning of 2021, and then in the summer of 2021. We paused also in here around the summer or May in last year, and now we are back to this level, right? So if you do break above this level, if you do break above this 31, 32 mark, that can be a super bullish indication in here. However, we can actually kind of respect this level, and Bitcoin can actually continue to move or start moving lower from here. At this point, we are starting to see a big range happening, and this can be money being exchanged from buyers to sellers. This can be kind of as work as a distribution phase in here. So keeping an eye on lows that may be broken, keeping an eye on how price is it getting rejected anytime it kind of starts to go higher or not, or by any chance if it starts gaining momentum until kind of price slowly may manage to break above all this structure, or the opposite. Price kind of slowly is going to start moving to the downside. If it breaks even below this low again, this is one of the most important barriers as well. This is around 25K mark. Price can even break a little bit below that and kind of continue to go higher. We have this really strong zone that can work as support for Bitcoin. Otherwise, if you do break below this level, it can also open doors for price to go even much lower than that, and maybe getting closer again to the 20K mark. If not, then even more. So we are literally within this range. We'll consider this one, not even just this one, and see what Bitcoin is going to do in the near future around those levels. And Ethereum is kind of similar, right? It has maybe a little bit of a move to the upside as well, kind of trading closer to this high. I mentioned that I wanted to see price reacting from there a few weeks ago. Price has done that, and again, as I mentioned, it's within this range. So this level also needs to kind of be broken. If that's broken, maybe we can start seeing Ethereum going much lower. As long as it's respected, we may just see eventually gaining momentum to the upside, as it has been doing for this last since the beginning of the year. That level, close to 1,906 or something like that, it looks like a good level as well. Eventually, if price does want to go there. So we are in really interesting levels, both in Ethereum and Bitcoin, in terms of looking for potential reversals. And if we do break above it, that can lead to a much higher target from this bullishness that we have since the beginning of the year. So keep an eye on that one. Interesting times ahead in these two assets. And that's it for me, guys. Basically, again, focus is going to be on the NFP, which is going to be a weird one because it's going to be basically bank holiday around the world, except in the US. More data regarding the labor market, interest rate decision in Australia. And let's see what is the follow-up after this announcement overnight with the OPEC, the 9 members of the OPEC announcing a cut in the production of roughly 1.6 million barrels per day, and what kind of consequence that can have in the economy and eventually in the inflation as well. So thank you again for watching. I'll see you guys next week. Have a good month. Bye-bye.